Welcome back to another video. I just wanted to break down some price action with you. A couple of trades that I took from my journal. This was on NZD USD between the 14th of August and Friday the 17th of August. Before we get into it, I just wanted to show you our Discord. It's absolutely free to join. Link is in the description. I made this channel yesterday. I'm going to be dropping some signals in there. So get in there and take these signals, all 1 to 5 RR. I post my market analysis, me and my buddy, every single day what we want to see. And we've got, a nice little group of traders absolutely killing the market on a daily basis. And like I said, it's totally free to get in there. And yeah, drop me a message. Now, this is New Zealand dollar, US dollar, Kiwi dollar, and I've actually tested this pair, vigorously. I've recorded all of my trades on this pair for the past 2 years or so. I've averaged about 75% win rate, and in 2023 and 2022, it was about 62% win rate. In my journal Discord here, you can see I've got all of my recorded trades. Every single time I take a trade, I do record it. So I do know what I'm talking about with my strategy. So yeah, let's get into it. Basically, you want to be trading from external structures and from runs on liquidity and in the higher and lower portions of these structural ranges. So if you can see here, we get a run on buy side liquidity and followed by a break in structure on the 15-minute time frame. So what I would be looking at firstly is the time. As you can see here, I've denoted London kill zones and New York kill zones respectively. So these are the times that I'm looking to get into the trades, with London kill zone being 2 a.m. to 5 a.m. New York local time, and New York kill zone being 7 a.m. to about 10:30 a.m. New York local time. Now, these timings are really important. As you can see, pretty much every day during these times, you'll see significant moves. So what I would basically do is I would draw on my structural range using a GAN box. And if you just want to see my settings here, and I only trade from the higher 30% or lower 30%. Oh, that's not what I wanted. Or lower 30%. So my sells must come out of this area and my buys must come out of this area. Right now we're looking at a sell side market, so we're going to be looking at this higher portion. So notice when as well this run on liquidity was formed and the aggressive displacement was formed. It was formed during London kill zone. So this tells us that it's a very high probability order block point of interest to look for trades from. As well, we have these equal highs stacked here to give us some buy side liquidity to take into our trade. And also notice when this was formed, New York kill zone. So it's a nice bit of liquidity there. People have their stops resting above there, which is great. So first of all, I would automatically be looking at this wick. It sticks out, and wicks almost always give reactions. So I would have this marked. I wouldn't really want to trade off this. As you can see, it's equal highs. I don't really like trading from equal highs or equal lows, which is absolutely understandable. And another thing that you can do to refine even more is you can also mark your premium discount of the wick itself, which can give you some nice confluence. So we now have the area that we want to trade from. I'll just delete this to make it a little bit cleaner. And we've also got obviously our range mark there. We are trading out of the higher 30% during a kill zone window. As you can see here, this is 2 a.m. New York local time up until 5 a.m. New York local time. Price trades in, and if you notice here, the bodies of the candle, they respect the wick EQ, which can give us a bit of prognostication that price is going to continue to the downside and respect this wick. So after you get this obviously big bullish candle in, you would probably want to be waiting a little bit longer than just hit and sell up there. So as soon as we get this bearish candle that takes out the low of this bullish candle, we now have a bearish order block which has been formed, and we can take a short position on the return up, noting and being confident that this high should not now be violated because we are trading with the trend, which is obviously down on this time frame. So what we would do is we would look to get short here, and we can just cover this candle high, which gives us about 7.5 pip stop loss. And ultimately, I always take profit at 1 to 5, which, as you can see here, that is hit in 4 hours 45 minutes. You could, if you wanted to, hold to the swing low, which would give you a nice 7R. Some people might want to swing this trade and hold it for even longer, and you can see it ultimately delivered 11R. But me personally, I just like to secure my money, get out at 5R, which allows me one very fair and reasonable win rate, and also two, it ensures that I'm constantly taking profits out of the market and I'm not swinging for the hills on every single trade. And literally the same thing just repeats over and over again. I can just mark up this as well, right? So we've got a run on buy side liquidity here. We have a break in structure on the 15-minute time frame here. And we also have clean highs here, buy side to take into obviously our trade. And if we just draw our range on here, high to low, we also have another very long wick here, which, as you can see, this price does not return to the top third. We almost get there. However, the point of interest that we want to be trading from must be touching the higher third at least. As you can see here, we do that. So I can mark that here, and notice the time as well. We have New York kill zone here, 7 a.m. till about 10:30 a.m. New York local time, and price hits during this time. During this blank spot here is London lull, and you might FOMO into a trade here, and you'd be thinking, oh look, we've got a bearish candle, let's sell here. Ultimately, you get stopped out. Why? Because price doesn't hit during a kill zone. It's a low volume trading session, between London Open and New York Open, so you want to avoid trading between those hours. And as soon as we come into New York kill zone, you see we get that nice spike in. If you want, you could refine this point of interest to this inside bar. It doesn't really matter, price hits it nonetheless. And you can get involved somewhere here with, let's go with a 10 pip stop on this trade. And again, we're just going to be targeting 5R, which, as you can see, we don't hit on this day. It takes about 4 days to hit, which I don't know. Here I might close at 4.8R. That's not 4 days. You're lying to me. 4 days? Oh, it's a weekend. It's Friday. This is Monday. Yeah, that makes sense. So 2 trading days, which is absolutely fine. Ultimately, it runs about 6R. You take your profits and you get out of the market. You would probably end up closing here for 4.5R on Friday. New York session or London session, whatever. You can see the strategy. It really does yield 5R almost every single time. I take profits at 5R or I take a loss. So yeah, that's basically the video. Nice, short, sweet, and snappy. And on to the next one in a couple of days.